Hey, how you doing this morning? It's Dave Duford here at Buy Life Insurance for Burial, where I help people like you get affordable life insurance quotes. And today's topic is 8 steps to getting the best final expense life insurance quote. And I'm figuring you are here watching this video because you're interested in looking at final expense life insurance and want to see what your options are out there, but aren't necessarily sure as to where to start. So if that describes you, then stick around because we're about to go over a lot of detail in helping you find really the best way to get the best plan for you and your circumstances. So let's get started. So first of all, I'm going to tell you about myself as well as my business so you can get to know me a little bit more. And then I'm going to tell you the bottom line, 8 steps that you need to take to get the best final expense life insurance quote. And so let's talk about what steps we're going to cover. We're first going to talk about defining your goals. We're going to talk about what you want to do with the policy you've got, and whether or not you want to be buried or cremated. And we're going to cover other reasons to own final expense life insurance and other goals people have related to covering final expenses. Then we're going to determine which type of life insurance policy works best. So when I say that, there's different plans out there, and it's important you understand the difference. We're going to go into very good detail about describing how they work and what benefits and drawbacks there are. And then we're going to tell you and describe how to choose who to work with to give you the best options, and then help you determine if you qualify on health as well as your budget, and then give you the next steps as to how to apply and get the ball rolling. So my name is David Duford. I am the owner and founder of BuyLifeInsuranceForBurial.com, where I help people just like you find affordable final expense life insurance quotes for themselves or a loved one. I've been licensed as a life insurance agent since 2011, helping people just like you across the country. In fact, I've helped over 3,000 families with their life insurance needs. I'm also a published author, you can see down there in the corner of the screen, of the official guide to buying final expense life insurance. It's essentially a guide very much like this video that helps people figure out what the options are and what would work best for them. And then also I recruit and train agents nationally, and I teach them how to go into their own communities and actually do the same thing, but in a face-to-face manner with helping their clients with life insurance needs. And last but not least, I am married, have been since 2008, almost 10 years now at the filming of this, and we are planning on our 4th baby to arrive anytime now. So wish us luck. So let's talk about first, the first step in figuring out how to get the best life insurance quote. So it's the final expense life insurance quote. So it's pretty important to figure out what is important first from the very beginning, right? We want to know what your goals are, okay? Whenever you if you want to accomplish any kind of task, it's important to understand where you are now and where you want to be. Because once you define the difference between one point to the end point, well, now we can tether those together and create a path in which you can follow down. And the more specificity you provide in your goals, the better off you're going to be in understanding, okay, this is the kind of policy I want, or this is the kind of policy I do not want. Why? Because X, Y, Z. It doesn't fit my goals. It doesn't fit my budget. Things like this related to your goals. So let's talk about how to define your final expense life insurance goals. So it's really important to make sure that you understand what you need to do to figure out what's important to you. So the first thing, in my opinion, may come off as strange, but it's important, is your budget. A lot of people buy final expense life insurance who are on a fixed income. If you're buying for a parent, you certainly may be working, but you may be in a situation where you need to keep a certain budget. So you need to think ahead of time what you're comfortable paying, something that's easily affordable. Why is this important? Well, what you don't want to do is buy a plan with the potential of dropping it in the future, right? Because in 6 or 12 months, if something financially bad happens and you can't afford this thing, well, that's bad. It's a bad use of your money. It doesn't do any good when you got to drop it, right? So I'm a big advocate of figuring out ahead of time what you're comfortable paying, what type of budget works best for you. A lot of people in this business, when they buy a final expense plan, they pay about $50 a month, give or take. Some people pay a lot more. It just depends on really what you want to accomplish and how much coverage you got, because again, all goes back to your goals. So you got to also figure out that you want to get the best quality of coverage. So a lot of that depends upon what your goals are. If your goal is to have coverage to pay off a funeral bill, and you don't know when you're going to die, which who does, right? Nobody knows. Then you probably need a plan that's permanent and it doesn't go away and it doesn't cancel because you age too high. Lots of plans out there, if you're not careful, actually terminate before a set end date. So if you get past, say, the age of 80 with a lot of insurance, they just cancel you. So does it make sense to get a plan that cancels before you do? Not in that regard. So you got to think about, again, what it is that you're exactly trying to accomplish. We'll go into this a little bit more to better define that. What are the kind of things it will cover? So when I say what will it cover, well, of course, what I mean by that is, do you want to be buried? Do you want to be cremated? What other final expenses are there that you're going to have to jump into? So let's talk about that a little bit more in a second. So one question I like to use when I sit down with my clients or talk to them over the phone, helping them wherever they live, is I like to ask them, what do you want your policy to do for you? And so what I want you to do is really think about this question, because answering this question helps identify what your most important goals are for purchasing the final expense life insurance. So it's not to sound grim, but when you do pass away, you have to imagine this policy coming to life. It's been sitting in your drawer for hopefully a very long time. And then you die, and we walk in. And what do you want that plan to do? Think about it. What do you want it to pay for? Who do you want it to go to? How do you want it to affect the lives of the people you leave behind? Again, if you can better imagine the circumstances of what would happen and how that policy would pay for it, again, that better defines what your goals are. And here's the thing. If you don't answer this question, this is why I think this is really important to answer. If you don't answer this question ahead of time, you'll do one of the following things. You'll lose interest in keeping the plan. So if you don't take time to really define why it's important to own a life insurance policy and what you want it to do for you, you may keep this for a year or two and then forget that its real sole purpose and fundamental reason that you owned it. So because there wasn't that much thought put into it. And then the other thing you may do, like I mentioned earlier, you may buy the wrong plan for your particular goals. You may just be looking at the first thing that you see without really investigating the fine print, and could end up making a really bad purchase decision, a purchase decision where you have life insurance, but it doesn't match the actual goals of what you're trying to accomplish. And then, and kind of in a related amount, you may risk more time waiting around not getting covered. So a lot of people, they start thinking this way, and they get flustered because it's tough, right? I mean, we're all going to die, and it's hard to think about the consequences of passing away, and what we will do and how our loved ones will survive. And a lot of people don't want to think that way. And so they put off the decision because there's confusion and there's emotion. But you've got to work through this. You've got to really think through the entirety, again, from point A to point B. Because by doing that, then you'll be better able to define what kind of plan is going to be in your best interest. So I really feel strongly about this. I think it's really important. And you should definitely really use this step to take time to think about what you want your policy to do for you, because it'll make a huge impact on the quality of coverage you have, as well as your long-term desire to keep it. So let's talk about a few reasons why people purchase life insurance, or final expense life insurance, to kind of build on this. So first of all, we talked about it briefly earlier. Do you want to be buried or cremated? So again, obviously, a final expense plan usually focuses around final expenses, which usually are a burial or cremation cost. And that's the number one reason why people buy these plans. So what do you prefer? Have you given it much thought? Do you want to be buried the traditional way in a casket, have a service? Do you want a multi-day service where people come and view your body and people have community with each other at the funeral home? Do you just want a gravesite service? What do you exactly want? Do you want a nice casket or just a basic casket? Again, you got to think about what exactly it is that you want to accomplish with your plan, or maybe you just want to be cremated. The biggest trend that we see in the funeral business is people are getting away from burials and more so into cremation. And there's all sorts of reasons why. I think partly religious, partly It is a function of the extreme cost it costs to bury someone. And cremation can be much less expensive, and people feel it's sufficient and don't want to put that much money in the ground. I hear that from all sorts of people where I live. So what I want to do is actually take you off this presentation screen, because you may be thinking, well, I don't know. What does it cost? How does that impact what it is that we're doing? So let me take you off the screen here, and what I'm going to actually do is take you through the National Funeral Directors Association website, and we're going to look at a cost breakdown on the average cost for a burial and then for a cremation. And then I'm going to kind of give you my opinions as somebody who's dealt with both for years and seeing the actual costs of different types, because what you're going to get is just a basic average. But I'm going to tell you a little bit about it to kind of give you a little more flexibility and more realization. So let's take it off screen, and then I'm going to come back up and then show you where the costs are. Okay, so right now we're on the National Funeral Directors Association.org website. So this is the official website for the Funeral Directors Society, and they like to compile statistics on funerals and cremations and show the inflation, and show the rising costs, but also to show averages, so regular people like you know what to expect going into a funeral. So we're going to click on costs. General Funeral Service Facts just discusses the rate at which there's less and less funeral homes, and the rates of cremation and burial. Interesting. It just shows that there's more cremation rates, the rate of people getting a cremation, not so much a price, but cost is what we're concerned with in this video, so let's jump in here. So what we're looking at down here, I tell you how they collect this information, and they give you some basic overviews. But what we're looking at here to start is the national median cost for an adult funeral with a viewing and a burial. And they're only looking at the difference between 3 years, which would be in 2017 and 2014. And I'm not going to go into extreme detail here. I just want you to notice that there's items and then the years shown, 2017 being the one that we're concerned with. But we're going to see the items here to the side. So I'll just slowly scroll through this. These are all typical items involved with a funeral. Of course, you have things like the embalming, which most likely needs to be done. The facility usages, the hearse, of course, the casket. And so when you add in the vault, which is typical of most burials these days, the vault is what goes around the casket to ensure it's properly buried and contained. The total cost that you're looking at is about $8,755. Again, this is a national average. So you can essentially assume if you were to die immediately right now, and it's 2017, that is a good estimate as to what to expect. Now quickly, before I go into some personal opinion on those prices, let's take a look at the national median cost for an adult funeral with viewing and cremation. So this is the same as above in the sense that there are viewings, there is a service, but there is no burial. So what this means is there shouldn't be a casket price nor a vault price. And they will say cremation casket, so that will be something the body is shown in. But the price here total is $6,260. And that has risen quite a bit from even a couple of years ago on an average basis. So a couple of things now, you've seen the prices. I want to inflect my opinions upon you. As not a funeral director, I'm not a funeral director, but as an insurance agent that deals with final expense life insurance, I tend to think that the funeral bill average is a good estimate. Now, if you live in more higher cost of living areas, that price will probably be higher. For example, if you live in California or the East Coast, it's likely that rate is going to be in the $10,000 to $15,000 range easily. I've heard of even, for example, places like Hawaii, the prices being double or even triple that amount. So take that with a grain of salt. If you live in flyover America, middle America, if you live in Tennessee like I do, that average is pretty representative. The other thing you'll find out is the funeral business is like all others. There are some funeral homes that will do services at a higher price because they appeal to a higher price mentality person. And then there are what we would call your discount funeral homes. And many times they use the same items, they use the same procedures. There's no difference necessarily in the immediate quality, but there could be a vast majority difference in price. Take, for example, where I live in a town just north of me, there's funeral homes that will charge $10,000 to $12,000 for a funeral, which is pretty expensive in Tennessee. And then you'll have a funeral home that will charge $3,000, $4,000, $5,000 for a burial. So it can range wildly depending on what you want to get. It's very much like buying a entry-level vehicle, maybe like a Ford two-door coupe versus buying the Corvette, right? You're going to have a huge price difference. It still gets you from point A to point B, right? But there's going to be a price difference because of what you're buying. Now, when we look at cremation, I think when it comes to the cremation expenses we see here, I don't feel that the cremation bills are exactly accurate. Let me explain why. Even though these are averages, and even though these are numbers that were hopefully conducted in a scientific manner, one of the big reasons people have been attracted to cremations is it's just not nearly as expensive. So take, for example, there are different ways to be cremated and what services you can get. You can have a direct cremation in many cities, including where I live, for under $1,000. That's where they just literally take your body and cremate it and put it in within a receptacle, an urn. There are facilities that will do it for $2,000 and have a wake or a service involved. Some of the more upper scale ones will do it for more, several $1,000s more. But as an average, I don't see many people who do cremation having all of those elements to it. That doesn't mean it won't happen or it won't cost that much. But it just depends on really what you want in a cremation. A lot of people who want to be cremated, part of the reason is they don't want the frills associated with the burial. So they may not have the viewing. They may have something like what my grandfather had. He was cremated pretty quickly, and then we had a wake about a week later after he passed away at the Rotary Club. That was complimentary. He was a longtime member. He contributed a lot of his time and money. And he had the 21, well, he didn't have a 21 gun salute, but he did have bagpipes. That was a big deal, being of Scottish origin. And all of that was relatively inexpensive, and that was done in Michigan. So I don't see the cost components being that high in a lot of circumstances. With that said, it would be smart to have a good amount of coverage to protect, and in both cases this is true for inflationary concerns. Today's burial, if you're going to be buried, is around $10,000. You might as well get 15 or 20, especially if you're in your 50s or 60s. Maybe less if you're older than that. But if you go from 50 to 60 to 90, it's a long time for prices to move upward. So it's good to get as much as you can afford, of course, but ideally a little bit more is going to be wise because prices have gone up tremendously relative to, say, the 80s. And then for cremations, the same thing. A $5,000 plan in my mind is good, but $5,000 to $10,000 is probably a safe bet. So let's talk about other final expenses. This kind of builds upon if we're just looking for beyond just a burial plan or beyond just a cremation plan. There's other reasons people purchase a final expense life insurance plan. So one reason is a legacy of love. For example, I had a client who they owned assets, and there was a concern about a dispute occurring upon her passing, and the assets of themselves were highly, illiquid, which means they couldn't put them up for sale and then immediately sell them, cash them out, and then get cash in hand. And one of those particular people wanted that particular asset, and the other didn't really care but felt a right to them upon her passing. So this was setting up for a family dispute. So wisely, this woman decided to separate the illiquid asset and leave it for the person who really wanted it, and then get a life insurance plan to pay a cash benefit to the surviving kid. So what that would do in turn is basically allowing a plan to separate the estate in an amicable way and to satisfy both the one who wanted this particular asset that was liquid by design and nature, and then the other one who really just wanted money, wasn't interested in the asset except for its cash value. So you can leave a legacy of love, or maybe you just leave money behind to a daughter, a son, somebody you love. My mother was gifted an $8,000 plan that my grandfather had as an Army vet, and Mom didn't know about it. Boy, she needed a new roof, and it came in perfectly timed. So stuff like that makes a huge difference in people's lives, and it can't be discounted. Of course, if you are married and you're worried about your spouse economically being dramatically affected when you die, buying a life insurance plan can be a method in which to replace your outgoing income. So for example, if you were the breadwinner, your husband was a breadwinner, and they make the predominant source of the income in retirement, imagine if they pass away. Just wave a wand and picture yourself in a position of not having them. Think about your expenses. Think about what you owe. Think about what it takes to just live the lifestyle you have. And now imagine the kind of income you're bringing in and then watching that go out the door with him. So if you're scared of that, if you're worried about something like that happening, the nice thing about a life insurance policy, as soon as your spouse walks out, we walk in and we pay a lump sum in the form of an income replacement plan that will help offset that loss of income for a period of time. It makes the lifestyle of you easier not to necessarily lose it. It gives you time to, maybe if you own a house and you can't necessarily afford the mortgage on your own, or you just want to outright sell it and downsize, that life insurance plan gives you time to get to that point. Whereas if you don't have time, then you're under pressure. You have to sell it. You may sell it a lot less than you need to, and you'll lose a tremendous amount of money out of it, because everything that needs to sell immediately, like a fire sale, always sells for pennies on the dollar. So life insurance is a great way to prevent that from happening, in the sense it gives you more time to prepare and to have the best outcomes possible. Also, people buy life insurance plans, final expense life insurance plans, to pay down debts. Let's say you owe money on a car, you want to keep it in the family, maybe give it to a grandkid. A policy can take care of that stuff. Maybe you owe medical bills or credit card debt. Final expense life insurance plans aren't designed to go directly to the funeral home. They're designed to go to a beneficiary, like a loved one of yours. And then that can go towards paying down debts so that they don't have to assume them. Same boat here, mortgage payment protection plan. So maybe you get enough to cover and pay off the entire mortgage. Maybe you get a lump sum and you set that aside in a bank, and it's kind of the same mentality that I talked about the income replacement plan. Maybe you get a $25,000 plan. Your mortgage is $500 a month. That means you pay $6,000 a year in mortgage payments. And then that gives you approximately 4 years to pay the mortgage without being under stress of not being able to pay it if you couldn't out of pocket. So what this gives you is more time, again, to allow your house hopefully to appreciate in value, to live in your house a little bit longer, but also to get it prepared and get it up on the market in case it doesn't sell immediately. So now that you've got a good idea of why to buy life insurance for final expenses, you've got a good idea of you want to be buried or cremated and other final expenses you want to pay for, let's talk about determining what kind of life insurance policy type fits your goals best. So look, here's the thing that's really important that you understand about final expense life insurance. They're not all the same, okay? So some plans are better than others. And now when I say better, this is big to me. Better is a relative term. What that means is that what I care about as an insurance agent is your goals and figuring out what you want to accomplish, and then making sure we establish what's most important in your goals. And based on those goals and the level of importance, then going out to the market to figure out, okay, it sounds like you want X, Y, and Z. Here's a plan that, and let me tell you how it accomplishes X, Y, and Z. So the goal is to get you a plan that basically just matches your goals. We don't want a mismatch of life insurance that doesn't accomplish your goals. While having some life insurance is better than none, if it doesn't accomplish your goals, then you're in big trouble, okay? So again, it's important to take the time to match life insurance to goals. So let's take a look at the two different types of life insurance options to consider. And then what I want to do is analyze both the pros and the cons about how they work. So let's first talk about permanent life insurance. So you may understand permanent life insurance as whole life insurance or straight line life insurance. Permanent life insurance is designed to provide permanent life insurance protection until the insured passes away. So the most common types of whole life insurance and no lapse universal life insurance. So the benefits of these particular types of plans are pretty simple. So first of all, the premiums never increase. And it simply just means what it means is that once you take out the plan and you pay the prescribed premium that is built into the plan, you never have to worry about your premiums going up unexpectedly. So this is perfect, especially for somebody who is on a fixed income. Maybe you're in a position where you get Social Security, And the raises aren't tremendous. They're meager, if anything. And there's nothing worse than having escalating prices on everything else, because that takes away from what you can do elsewise. So with a permanent plan, you have premiums locked in for the entirety of the plan, which means until you pass away. That's the other element, other benefit, is that the coverage never cancels due to age or health. So what's nice about this is that as long as you pay the premium as recommended, then you never can be canceled or because of your health changing or getting too old. You can literally have this plan into your hundreds if you make it to that long. And in many cases, you can get first day full coverage. Again, I say many cases because it depends on if you can health qualify. That's the job of the agent like myself, to analyze their health and then figure out what options are going to be best. Drawbacks of these types of plans, you're going to pay higher premiums relative to the amount of coverage you get versus what we'll see in a minute. And the reason is, it's like you're buying a plan that has very effective, important guarantees and warranties built into it. The guarantee and the warranty of the premiums never going up. The guarantee and the warranty of the coverage ever canceling. This is pretty good stuff. A lot of people like this because a lot of life insurance don't have those guarantees. They don't have those warranties. And so what may be cheaper ends up costing you a lot more in the long term because of the warranties and guarantees not being there. So what I'm going to do real quick, I just want to show you some prices real quick. I'm going to show you a 65-year-old female and a 65-year-old male non-smoker $10,000 plan, just so you can get an idea of what this kind of stuff runs, and just so you can better understand what your options are. I can go into a lot more details on pricing. If you're older or younger, of course, prices may be higher, maybe lower. If you want specifics on price, call me at the number at the bottom or send me a message. I'm happy to help you out with a quote. But let me pull you over to my screen here and show you some prices. Okay, so I just want to direct your attention down here. This is a 65-year-old male non-smoker for $10,000 in coverage. You're looking at approximately, and this is whole life insurance, guys. So if you qualify, rates never go up, coverage never cancels, and it's first day full coverage. Just an approximate estimate. You know, we're looking at maybe the upper 40s, most likely the lower 50s to upper 50s for $10,000 in coverage. And real quick, I'm going to show you a $10,000 non-smoker rate for females. You're looking at upper 30s, lower 40s to mid 40s for $10,000 in coverage. And what you're looking at here, if you look at the top two particular plans, these are reserved for very healthy people. This is a great company that offers the No Lapse Universal Life Guaranteed program. So it means your premiums fixed as long as you pay it on time and continuously manner. But you get a lot more coverage because what we're looking at here is $25,000. If you were to qualify, again, you got to be very healthy. It's first day full coverage. Rates never go up as long as you pay the premium directed as the policy says, and you can never be canceled due to age or health. So there's that for a female, 65 non-smoker, and then for a male who is a non-smoker, $25,000. You're looking at, you know, anywhere between $60 and $100, but it's a lot better than just a standalone whole life plan. So I like to get these plans when I have somebody who's in very good shape. They meet all the requirements that I'm looking for as far as health goes, height, weight, prescription use, that kind of thing, and wants a little bit more than just enough to cover for $10,000. So now that we've looked at permanent life insurance options, let's take a look at your second option, which is temporary or term life insurance. So the definition of temporary life insurance is that it provides life insurance over a predetermined, preset period of time. So the big difference here is that you're buying an insurance plan that is designed to cancel at a future date. So you're looking at periods of plans that will last for 10 years, 15 years, 20 years, and 30 years. It depends on your age, depends on your health. But and you may be asking, well, why would I want to buy a plan where I may lose the coverage if I outlive it? Well, most people buy a term insurance plan because they want to get the most coverage for the least amount of premium dollar. And they're usually used to cover larger obligations that are going to be more expensive. The most common one that comes to mind is a mortgage. So let's say you owe $100,000 or $50,000 on a mortgage. This would be a good reason to buy a term insurance plan because ideally you'll live long enough to pay the thing down. So you buy a temporary plan to cover it temporarily in case you don't live as long as it takes to pay off the mortgage. So the benefits of a temporary insurance plan, like I said, the main benefit really is get the most coverage for the least dollar of premium. That is the most important factor here. If you've got larger bills due, term plans make a lot of sense. The drawbacks are, look, it's typically tougher to qualify for compared to simplified issue whole life insurance. So there's a lot more health questions. They're going to look into your health a lot more in depth. A lot of people may not qualify as they tend to get up there in age. It's certainly worth trying to. I've had plenty of people in their 60s qualify and above for term insurance. But the main thing you got to remember here, and it goes back to your goal setting. You'll see some good prices here for coverage in a minute. A lot more coverage for less premium. But the problem here is that term insurance terminates. And what may look good on paper, imagine outliving it. It's not very good if you really intended for that thing to be there at any point and not just within a certain period of time. Hopefully that makes sense. So I want to show you some sample prices real quick. I'm just going to show you a 65-year-old male and a 65-year-old female, non-smoker, for $10,000, I'm sorry, for $50,000 in term insurance for a 10-year period of time. Again, we can go longer, we can go shorter, depending on the age and health, but just a sample rate as to what to expect. Okay, so like I said, you're looking at, the direct your attention top couple here. These are preferred plus and preferred non-tobacco, $50,000 in coverage for a male at age 65 for a 10-year period of time. And now to look at a female real quick for $50,000, 10-year term, 65-year-old, $50,000 plan is going to be approximately between these prices. Again, these are for 10-year plans, they're for 15-year terms. Very good rates from Sagicor. I like writing them in most circumstances. They've got very competitive underwriting and prices, as you can see. So now that you have an idea of what kind of plan suits your goals best, you've looked at the options, and you figured out, well, I think I'm kind of in this direction versus this other one. That's good enough. You don't have to know exactly for sure, because sometimes it takes talking to an agent to figure out and work through some of this mental gymnastics, if you will. The next step is determine who to work with. So once you have a good idea of what you want, you need to select the best company or agent to work with. So I'm going to give you a couple of options and go into depth as to what to expect from these options and give you the pros and cons. So the first one is buying from the TV ads that are on all the time or the junk mail stuff you see. Maybe go to another option, going to a local storefront agent or dealing with a specialist in final expense life insurance but works with one company, or an independent insurance agent. So let's jump in and take a look. So the first option is buying from the TV or buying from a junk mail ad. And look, you know who I'm talking about. If you're over 50, they mail you junk every week. You see their ads on TV all the time between the game shows and the television shows that you watch, and it's never ending. Look, here's the thing. In my experience, these are the most expensive and the least value of coverage that are available. You don't want to go this route unless you literally have no other choice, meaning you've tried everybody else. These are like the last choice. Otherwise, you don't want to start here. So here's the thing. So a lot of these plans, you'll see their commercials. They've got people from TV, from game shows endorsing them. They talk about guaranteed acceptance life insurance. So the thing with guaranteed acceptance life insurance is that, yes, you're guaranteed to get it, but there's 2 years of no coverage, no matter if you're healthy or not healthy. So you're forced to not have coverage for 2 years. Quick story, my first client ever, his dad, had one of these guaranteed acceptance plans. He bought off TV. He had a stroke within the first year, and the family thought they were getting $10,000. They only got like $500 because they just got their money refunded back to them. Obviously not good, right? So this is a particular situation where you don't want to start there, right? Because guaranteed acceptance is the trump card. It's the last option. Don't make it your first, because you want to get fully covered. We don't know what tomorrow brings us, right? We want to get protection from the first day. Also, you've probably seen the companies that do the $1 buys you $20,000 in coverage. What's the catch there? Well, that's a term insurance plan that goes up in price every 5 years and then cancels at 80. So they bait you in, obviously, with a cheap price. Then they go up every couple of years. And a lot of people end up dropping it before they even need it because it becomes so expensive on the price increases. And a lot of people who buy this are buying it for final expenses, and they're baited by the cheap price. And again, there's a misalignment between what the policy actually does versus the goals of the client. Again, bad situations to be in. Again, do you want to die before or after 80, or do you think you will? I mean, nobody knows. Look, nobody really knows. It is not for us to know. as the good book says. And what comes down to it, you have to prepare despite the limited knowledge you have in the best way possible. So I don't like those guys, if you can imagine. As you can see, I've pretty much thrown out all the bad stuff for you to listen to. So I wouldn't recommend that except as a last-ditch effort. You could also buy from the guy you buy your auto insurance from. They do sell life insurance, but they're usually not specialists in life insurance. So here's what I mean. Let's reverse roles. I am a specialist in life insurance. I represent different companies. But you come to me to buy car insurance. Frankly, I don't even know where to start. Maybe I'll call up one of my companies and say, hey, you got car insurance? And I'm like, yeah. And I'll say, okay, I want to sell it. But I don't know anything about the company. I don't know if it's the best. I don't know if the offer and the product is going to be best suited for what you want to accomplish. Maybe I'm not giving you comprehensive coverage. Maybe I'm not giving you the coverage that you really want. Essentially, what I'm trying to do and what I'm attempting to accomplish is to sell you a product without matching what your goals are to the product, right? And that's because of a lack of knowledge. A lot of these car insurance storefront guys are very good in that market. They know what they're talking about, but they don't sell life insurance as a focus. So they're a specialist in one thing, but acting as generalists. Well, what you really want with anything that you buy is to deal with a specialist who their only focus is on life insurance or burial insurance or whatever. But if you approach a generalist for a specific need, you're probably not going to get the best deal. Case in point, a lot of these storefront operations have the highest premiums plus the toughest underwriting. I have known companies decline people, not just give them a higher price, but decline them because they've got diabetes. It's hard to work with companies that are that impose such restrictive covenants over getting coverage. So, you may not get the best coverage you can. You may be declined. And then that's on your record. And it's because you're dealing with an insurance agent that just frankly doesn't specialize in that manner. So I'm not big on that. It's an option, but I think there's better options. So let's talk about specialists. They're not all the same, okay? So you may find somebody who sells final expense life insurance, and they sound like they know what they're talking about. They certainly understand the business a little bit more. You can purchase from these guys, and these are what we call captive insurance agents. They specialize in burial insurance, but they're married to one company. The biggest problem with that is a lot of the times they push a high price. Can't be overstated. The prices are way higher than the competition's. The lack of selection from one company means that they're going to force feed you into one product, which may not fit you. One size does not fit all in underwriting. Each company has a standard in which they have underwriting. Certain conditions and ailments do not fit a particular company, while others would gladly accept it. So, each company has a different outlook on health. And when you only have a guy who works with one company, you're being forced into one option, which may not be your best option. And while specialization is good, here's the thing. What you want to specialize in is an agent that understands the market, who understands final expense life insurance, but also is not restricted to one carrier. That is an independent agent. Independent agents provide the best combination of pricing and coverage for the consumer. So take, for example, an independent agent like myself typically works with multiple final expense life insurance companies. I just don't offer one to my clients. I offer a multitude. And what I try to accomplish is figuring out what the person's goals are, what their health and underwriting is, and then finding the company that best fits all of that plus the goals that you have. So when you work with an insurance agent, you have a better chance for better quality of coverage. You're going to have a better chance of covering more health issues than the guy who only has one company. And many times, the premium difference is tremendous. You end up getting more bang for your buck, which is especially important if you're listening to this and are on a fixed income. So the next goal you got to do is determine if you actually health qualify. So you got an idea. You're working with an insurance agent who's independent. You know what you want. You know what your goals are. So let's say you decide on working with an independent agent to maximize your chances of getting competitively priced final expense life insurance. So what are your options in the following circumstance? So what I want to cover here is if you have great health, okay health, and not so good health. So if you got great health, it's likely that you're going to qualify for either you want term insurance or whole life insurance. Whatever it is that your goals are, it's likely you'll qualify for the best premiums. And so just make sure you're working with the agents that have the best flexibility and price. If you got okay health, so let's say you've got diabetes, but it's under control, or maybe you're a little overweight, or you've got blood pressure problems, it's still likely you'll be fine qualifying for a simplified issue whole life product. The term insurance may become, instead of a preferred rating, it may be a standard rating. It may be something a little lower in rating, which means your prices are a little bit higher to compensate for some of these health problems. Just because you've had some of these ailments is not going to say just completely decline you. I just want to make that clear. Now, if you have not so good health, then what you'll experience is, this is a pretty broad brush. If you have not so good health, you may be in a position of, maybe you have COPD, maybe you've had cancer or heart problems, maybe you're insulin dependent on your diabetes. That may preclude you or not get you the ability to get term insurance plans. I will say that for simplified issue whole life, there's a lot more flexibility. And my goal is to get you the most coverage that we can with that kind. But it may be at a higher price. It may be what we call guaranteed issue. So I want to prepare you. It just depends. It's hard to sit here and tell you exactly what to expect because there's so many health ailments. And to kind of, categorize it in one description is just impossible, right? It just depends on your health and your circumstances. So let's talk about how to qualify. So now that you got an idea of what's going to happen, applying is simple. You got to pick an agent that you like to work with. Hopefully, I've sold myself on you with the information that you've gathered so far, so you'll work with me. Second, if after I listen to your needs, I'll draw up a quote and describe how that matches your goals. And then once you like the idea, the next step is we either apply over the phone, over a telephonic process, or do it on the internet. So it's really easy. I don't even need to see you. That's why I work anywhere in the country. And after several days or weeks, your coverage approved, and then you get your policy, and boom, that's it. Usually there's no exams. A lot of people ask that. Many times with the companies I work with, there's no exam required. And there's no physical, no blood drawing out or anything like that. So what do you want to do at this point? Hopefully you like the idea of getting a plan. You got a better idea of what you want to accomplish. You feel better about your goals. And you know what kind of plan you think that would best suit your goals. Here's what you need to do next. 2 things. Go to my website, buylifeinsuranceforburial.com. Click contact at the top or the chat box at the bottom. Send me a message saying you'd like to speak with me and give me some information what you're looking for. Or you can call me at 888-626-0439. That way you can speak to me live and then we can talk. 5 or 10 minutes is all I need to drop a competitively priced quote to give you an idea of what you qualify for. If you like this video, thumbs it up, leave a comment, and make sure you subscribe if you have it. My name is David Duford at buylifeinsuranceforburial.com, where I help people like you across the country get affordable life insurance.